Hi, welcome to this Sphere Day, which is all about Forex market addiction. Now, Forex market addiction is actually very common, and a lot of traders who are addicted to the Forex markets don't even realize that they are. Now, in terms of seeing if you are addicted to the Forex markets, if you are stressed out about your trading positions, you're anxious, you always want to check price action, you get frustrated at the markets, you get angry when you lose, then you are probably addicted to the markets. Now this video is about spotting if you're addicted and then curing the addiction. Now, in terms of why do a huge amount of beginners in particular get addicted to the Forex markets? Well, basically they're chasing money for the sake of money's sake. And by that I mean they want to make as much money as possible. So they've got unrealistic profit objectives like doubling their account in just a few weeks or making 1,000% per annum or whatever. And two steroid hormones are going to make them not trade in the markets but gamble. And those steroid hormones are basically testosterone and dopamine. Now, testosterone is the steroid hormone of desire, and most of us really want money, okay? And money basically triggers testosterone response the same as if you are pursuing the opposite sex. It's considered that important by most people. So you will be driven to want to make as much money as possible, okay? And testosterone will basically lock your psychology and make you do it, okay? And you'll run losses further than you should. You'll do too big a position size. You'll hang on too long. You might add in. You'll take risks that are too big. Now, in terms of dopamine, dopamine is very much the feel-good hormone of the brain, and that gets triggered when you take profits. Okay, it's a great feeling. However, the dopamine hit, most traders are addicted, just keep wanting it. And once they've got some profits, which most traders will get at some point, they'll pursue the dopamine hit and they'll start to take losses. They'll try even harder to get the dopamine hit by taking too big a position size and basically trying to get back to profit too quickly. So those steroid hormones will really lock your psychology, and if you're chasing too much money, they will ensure that you will gamble rather than trade and lose. Okay. Now, in terms of being anxious about the markets and your positions and wanting to check prices, if you check prices too frequently, then you just will emotionally get involved in the price action, and you'll see short-term moves much more significant than they really are. Okay, I'll come back to this point in a moment. Now, in terms of curing the addiction, in this instance, there's more instances which I'll go through in a moment. What you have to do is have realistic profit objectives and never expose your account to too much risk. I mean, it's a ballpark figure, but I say never ever risk more than 10% of your account, because mathematically your risk to ruin is very high once you get above that number. And I'd actually recommend keeping your risk overall at 5% and your profit objectives realistic. If you do that, then you're not going to be so anxious to check price action all the time. Traders who are anxious to check price action all the time have position size that is too big. Okay, now it's common in Forex markets to see unrealistic gains. Okay, you've got to seek out the truth and not try and make money too quickly. You've got to be patient. You've got to trade Forex stress-free and in a calm fashion. Otherwise, you're going to gamble. Now, in terms of looking at price action too frequently, it'll also occur in another trading scenario which gets traders addicted, which is the huge amount of nonsense online that you can sit around at a price screen, okay, and just scalp and day trade the markets and make money. Now, if you sit in front of a screen and try and trade, frequency bias is really going to impact on you. Now, in terms of frequency bias, what it is basically your brain, biologically, is designed to basically put more weight on recent information than older information. So the short-term moves, they look really significant on the charts. They're not significant at all if you're trading off really low time frames, you're just trading noise and random price action. But when you look at the price screen, they do look significant. And you just have your emotions dragged into your trading if you're trying to scalp and day trade. You're not going to win anyway. It's just a bad way of trading. It brings frequency bias really out. And frequency bias, I'll just give you an example which you can relate to outside of Forex. Now consider, let's say you were driving to work and you read in the paper the day before that someone had been killed. They crashed their car on the road that you go along. What are you going to do? You're going to drive more carefully for the next few days, for sure, because you're aware that someone has been killed on that road. That road might be quite a safe road with not a lot of traffic on, etc., etc. The driver who crashed and killed himself may have been drunk, but you're still going to drive more carefully for a few days. Okay, that is frequency bias. Now, in terms of curing addiction, in terms of day trading and scalping is easy. Just stop it. Don't do it. I think in terms of Forex market addiction, most traders have an unhealthy obsession with money. Traders who actually make money do not focus on the money. Okay, they focus on the right process to make money over the longer term. And if you focus on the process with position sizes that are not too big, then you'll make money over the longer term. If you pursue money, then doing the correct process in terms of your strategy will go out the window and you will just be gambling. Okay, and I think in terms of Forex market addiction, it is actually very easy to cure. Okay, you've got to look at the facts in terms of the Forex markets, how quickly you can make money, how frequently you have to trade. You don't actually have to trade that frequently at all to make money, and you don't actually have to sit around looking at prices if you're trading longer term, which is the right way to trade. When I say longer term, you should be working off at least a daily chart in terms of levels, not really short-term levels. Okay, addiction, it is common. It is easy to cure. Okay, most traders, when they come in the markets, to a degree, most beginners are addicted. They're doing the wrong strategies, trading too short-term, or they're trying to make money too quickly with too big a position size, and that is a recipe for disaster. Now, in terms of Forex market addiction, final point is I'm going to do a PDF on it, and if you want that PDF, you can simply join our free mailing list on the link beneath this video, and we'll send it to you. But this video now, I think I've covered all the points I need to cover. So thank you very much for watching me. Take care and have a good day.